Good afternoon, everyone. So this is a very difficult session. Just post lunch, everybody will feel sleepy to make it live and interactive. A lot of responsibilities on me. To start with, I'm Debnath Mukhopadhyay. I'm CFO for TruAlt Bioenergy. TruAlt Bioenergy is India's largest player for the biofuel company. So let us get into the topic. The topic is very, very important and crucial. It's like the cost optimization versus the growth, how the CFOs will balance this. So in the traditional scenario, we, the CFOs, are being instructed by the board or by the shareholders to improve the profitability, improve the EBITDA margin and all. So then the first thing comes to our mind is that to reduce the cost. However, in today's scenario, is the companies like a growing company or which is having a highly growth is there. In one side of the company is like a old traditional company, maybe 60, 70 years old, which is having a organic growth, and the other company is having a expansion, the lot of investment, acquisition, all these things is on board to how to. For those, the investment is a key things. So for those companies, it is very important for the CFOs to balance both the cost control as well as to growth optimization. So on this, we'll start with my first the first question on this with Sidhartha is that in today's scenario, how we are implementing the cost control mechanism, especially to your particular industry, in your organization, how you implement that, and what is the impact on it to its growth, to your organization. If your organization having a growth plan, how you reduce your cost and to mitigate your growth story.
Thank you, Deb. Hello. Cost is a very difficult subject to talk about. And we use multiple terminologies associated with that. Some people use the word cost cutting. Some people use the word cost savings. Some people use the term cost investments, cost avoidance. I personally like the term cost optimization. I think if we approach it with the mindset of optimization, we're probably going to get to the right results. Cost cutting it just sounds very brutal, and generally it turns out to be very brutal. I'll just give a couple of examples from my career where I have been involved in different type of cost initiatives, and would love to see your perspective on that. I think we all know about COVID. That was a very recent phenomena where I think most of the organizations had to lay off a significant amount of their workforce, except for some industries who had a boom run. But in general, I think the economy had to lay off hundreds of people, or in some cases even thousands of people, to take cost out from the business. With the poll, right, with the raise of hand, was that the right thing to do? What does the audience think? Was that the right thing to do? Yeah. Very few people are saying. So how many people think it was wrong? Yeah. Okay. So there is a lot of people who are neutral, not sure. But imagine an organization like Apple, right, who laid off people and had $100 billion in cash with them. Did they do the right thing? I guess. Did they do the wrong thing? How many people think they did the wrong thing by laying off? Yeah. Still, I had a very interesting situation in my career. We had to do some cost cutting in our organizations. This was in Europe, by the way. And it was such that if we would have laid off that set of employees that we were looking at, the amount of money that we had to pay them in severance at the time of leaving would far exceed the amount of money we would have to pay them if we kept them on our payroll till their retirement. Right? These are situations that we face in our careers. To decide what's the right thing to do in a situation like that, because on one hand you have employees, on the other hand you have cash flows, on the third hand you have the profitability that you want to protect. Tough one. Another example I'll give you again from my career. Because of the market conditions, we chose to cut cost in one of these segments of our business. The implications of that was, if you cut cost, it is going to significantly impact your growth and revenue in that segment. It will significantly shrink. We still went ahead, did that. The negative side of that was, a couple of years after, when the markets were better, and we wanted to go back into that segment to sell our products, guess what? There was no receptivity of our brand in the marketplace because at the time when the customer needed us the most, we ditched them, and therefore the brand trust and loyalty was gone. Right? So a lot of these challenges are there when we talk about cost and cost in terms of investing in our businesses. I would encourage each one of you to not look at cost just as a number or just look at it as a ratio, because a lot of people kind of tend to look at cost income ratio, this ratio, that ratio, hey, let's do this. It invariably ends up going in the wrong direction, either in terms of investments, either in terms of market share, either in terms of customer satisfaction, customer loyalty. I have had both types of experiences, good and bad, in this situation where some initiatives have truly gone wrong. And I have initiatives which actually went really well and was able to drive simplification into the organization. So a lot to talk about, Dave, on those lines. But these are some of the opening thoughts I had on cost savings and cost avoidance in an organization.
Right. So we'll come to Sandeep next on this. See, for the new investment, one is the substantial cost is the financing, cost of finance. So that the stakeholders is always when the business, new segment of the business is coming up, there are a lot of questions comes on the business is not making profit and below EBITDA, it is coming negative and all. So basically the driver is the finance cost, because above EBITDA most of the cost gets capitalized and so on and so forth. So how you manage those things in your types of industries is the cost of finance at that and also where the growth is there, where you have no option to incur that cost. So how you optimize that? What is your strategy on this?
Hello. If I understand it right, you are basically asking between a short-term and a long-term strategy, right? Okay, got it. Thanks. So, see, the way we look in my industry, right, which is, I belong from Intra, it's an e-commerce industry. We typically segregate the entire cost into, let's say, fixed and variable. While the variable cost is very easy in terms of understanding what are the right success factors, return metrics associated with that cost, because you will obviously have a benchmark which would be evident from your past events or similar circumstances that you would have experienced, and hence it becomes very easy in terms of whether approving or you have certain targets to be met. So use those benchmarks and common understanding in terms of approval, yes or no, happens. The tricky situation happens when there is let's say, a type of cost which we had to incur for which there might not be any success factor metrics available. For example, I will want to say brand marketing, right? These are the spends where plan your brand marketing in such a way that you will say that I will do this and my sales will go up by XYZ, right? It's very difficult.